The more important growth story will be the continued growth of the Model 3 and the Model Y, and then increasingly over the next several years, the launch date of the Model 2 vehicle and that platform.
There's a major cash flow that's coming through for GM with all the profitability focus. I think that'll be a key driver for the stock, and the stock is very cheap. 0.25 price to sales. You look at Tesla, it's 6x price to sales. So
take Gravitated, Alphabet, Amazon, Apple, Meta Platforms, Microsoft, NVIDIA, and Tesla. See, these companies spew cash. They're practically ATM machines. Even Tesla, which used to be desperate for cash, but now has a pretty good balance sheet.
All that and more. So let's get to it. Tesla stock is down in the pre-market a little over 1%, sitting at $232.92. For the week, Tesla is down a little over 1.5%. Taking a look back 90 days, Tesla is down almost 5%. There's a bit of a consolidation, but a downward trend recently. My 135 call set to expire on December 15th currently has a market value of a little over $10,000. I mean, what truly is the value of being able to purchase 100 Tesla shares at $135 a pop? Either way, this option call that I bought on January 18th has treated me quite well. And while I'm hoping the stock continues to rise higher for the month of December, I'm more than likely going to hedge my bets by placing a few puts along the way leading up toward the new year. I'll keep you posted if anything goes too terribly awry.
Shares of Tesla have been left behind a little bit from this big rally across markets as the Cybertruck definitely hit a nerve. Some good, some bad, depending on the person's preferences. I got Tom White here with me in studio. Joining us, Seth Goldstein covers energy and resources at Morningstar. Tesla in the group. He's an equity strategist. So everybody's got their kind of preference and for the vehicle, Seth, and I feel like the world is fairly divided on how it looks, but the market seemed to be pretty objective. The shares are kind of stuck here. What's going on in your mind?
I think that the Cybertruck, when it was finally unveiled, had a higher price point than the market was anticipating, and so the market adjusted to perhaps lower total volumes as they ramp up production over the next several years than management was forecasting. Elon Musk wants to sell about 250,000 Cybertrucks a year, but with a higher price point, that likely makes it unaffordable to the consumers who, might appreciate the different design versus legacy trucks.
Okay, that's a good point because it's math-based. It's pretty straightforward. It does seem like it's going to have to prove itself a little bit as far as sales go.
Is it a good point? I mean, Cybertruck auctioned for $400,000. Tesla entertaining a clause in the purchase agreement that you could not flip these things. The higher price point for the level of volumes that they are slowly but surely going to increase over time will have no bearing on whether or not the consumers that have pre-ordered and are anxious to get this new vehicle. The all-wheel drive, I think, is fairly priced. It probably could have came in a little bit lower, but how the hell do you expect to capitalize on the fervent demand that is present? If they were already building 250 or 300,000 of these things, I might say you have a point, but I don't think they're going to get to 1,000 before the year's out. I imagine the Cyberbeast, the tri-motor version of this vehicle, could sell easily for $200,000 and people would still buy it at these volumes.
What kind of transparency do you expect to have on orders for this thing?
Well, Tesla's indicated they have a multi-million backlog order, but that's just simply a $100 deposit, so that might not translate to a full vehicle sales, of course. I think that we will start to see, as they launch the full production in 2024, we'll start to see sales of the vehicles. I don't expect they'll lump it in with the SX or 3Y, which are the two categories they break out for volume. So we will likely see Cybertruck with its own line or broken out separately so we can track the sales.
I'm kind of curious myself. They really don't divulge the semi-sale, but it's also not one of the primary vehicles for people to purchase when you go to the Tesla website. I wouldn't be surprised to see the Cybertruck being lumped in with the S and X, but time will tell. We'll see.
Okay. The specs seem pretty cool, gotta say. Hauling the Porsche and beating the Porsche was definitely pretty sweet. Do you think that this will be a major catalyst for the stock, or was that kind of the event, the unveil, and now we go back to sort of monitoring deliveries and production numbers for the main primary fleet?
Yeah, I think it's going to be more of the latter. The more important growth story will be the continued growth of the Model 3 and the Model Y, and then increasingly over the next several years, the launch date of the Model 2 vehicle and that platform, which will likely feature a sedan and an SUV, which will open up Tesla to the affordable vehicle market. That's going to be the bigger catalyst for the stock, along with, can Tesla offset price cuts with cost reductions that they outlined in the 2023 Investor Day earlier this year? And as those cost reductions take hold, can they restore the profit margins that we've come to see from them over the past couple of years before the price cuts have heavily weighed on profits this year? So I think those are the longer term catalysts. The Cybertruck, though, does highlight Tesla's technology, the ability to sell a truck that can, haul a Porsche and still beat a Porsche, in a race, and also highlight very strong towing capacity, which many truck owners come to appreciate and look for in a truck. So I think that does highlight Tesla's technological advantage, but longer term, I think it's less important to the profitability of the company.
Fascinating to see how others view the company. Right, wrong, or indifferent, it's always good to listen to the opinions of intelligent individuals.
Target on Tesla right now, still a decent amount below where we're at, $210, a fair value rating. A narrow moat, as you describe it. It does seem like the Cybertruck maybe was a way to make sure that moat didn't get even narrower, right? Because this time they're not in front leading on this category.
Exactly. Tesla does not enjoy the first mover advantage for an EV truck. They're not the incumbent. So, it's upon them to make the case to consumers who are considering a Ford F-150 Lightning or considering a Rivian to instead buy the Cybertruck. The design, while it's pretty polarizing, may win some customers who like the different design versus classic trucks. But then the performance specs, I think Tesla really wanted to make sure that they were leading the pack as far as the fast acceleration and the heavy towing that can really win the case that this is a truck worth buying.
It's more than just the skin of the truck that you choose to buy. The Cybertruck is grounded in Tesla's 3 pillars: functionality, performance, and style. When you look under the proverbial hood of a Tesla, underneath lies incredible engineering, immaculate software that, quite frankly, the R1T or the Lightning or any other pickup, gas or electric, just cannot compete with. Not to mention, it's better at towing. Not to mention, it's faster than a Porsche 911. Not to mention, this mother is bulletproof. The Model 3 was not designed for individuals that weren't purchasing BMWs or other luxury sedans. But you know what happened? Motherfuckers driving Hyundais, Toyota Corollas, trading those cars in to get the Model 3. You don't think the same thing's gonna happen with the Cybertruck? That is the information that I want to know. When people go to buy this Cybertruck, what cars are they trading in order to take hold of this monstrosity of a truck? This time next year, those stats will be very telling.
BJ Rakesh. BJ, great to have you back. You point out a bunch of reasons to like the name. You point out the buyback, some of these trough valuations. Are you arguing that some fundamental issues are now getting fixed?
Yeah, thanks for having me on, Carl. Yeah, for GM, we do like it. I think some of the major long-term issues with the company, especially, are starting to get resolved. I think if you look at the UAW agreement, that puts to bed for the next 5 years much of any cost increases, and the company is completely offsetting the UAW wage increases with fixed cost reductions. On the EV side too, it'll be a more measured, more profitable ramp as they bring on the GM Ultium battery side. So that also will be a tailwind for them on the profitability side. Number 3, Cruise, which has been almost a $2 billion headwind on earnings because of the loss on there, is starting to get curtailed. So that will also be a tailwind on the profitability side. So we see a much better, much more profitable roadmap for them going out. And 2024 will be a much better production year for them. 2023 took almost a 3% hit to production, the UAW strikes. So net, much better cost reductions, much stronger EV roadmap, Cruise being scaled back. You have production ramping into 2024. Plus also, if you look at sentiment on this name, it's a major low. Valuations are a 10-year low. If you look at what they're doing on the share repurchase side, they're going back to the shareholder. I mean, major accelerated stock repurchases there. And I think that would continue into the next couple of years because there's a major cash flow that's coming through for GM with all the profitability focus. I think that'll be a key driver for the stock. And the stock is very cheap, 0.25 price to sales. You look at Tesla, it's 6x price to sales. So,
well, you can't really compare Tesla and GM. One has a high likelihood of being around in the next decade and the other a huge chance of bankruptcy. But don't get me wrong, for the next couple of years, maybe, GM has some chance to do some wonderful things within the realm of the internal combustion engine, hybrids or whatever. Their core business is internal combustion engine. Not only are they struggling in battery electric vehicles, they plan to scale back in order to get these short-term gains for the next couple of years. Problem is, when will the market decide that they are not going to be a player in the next decade? That's the multi-billion-dollar question that's going to hinge on this company. And right now, they're doing everything relatively short-term. There's no telling when the floor will drop out from beneath you. Will it be 2025? 2026? If you're invested in GM, you're not going to want to be on that boat when the iceberg hits.
What do you think it says to those who have long argued that the legacy OEMs have no capital discipline? They've been chasing their own tail on the EV front. There's no way they can match Tesla's cost advantage. Is this more of are they getting religion on reality there?
Yeah, absolutely. I think what you're seeing at GM is a much more balanced approach. As they say, a smart EV ramp. They have a very strong ICE portfolio. They dominate the market in SUVs and trucks, but they can parlay that into the EV side. And if they can drive a very profitable ramp on the battery side, they are doing exactly all the things that Tesla is doing. If they can start to slowly ramp that, I think they have the game together. I think, and that's exactly what's happening. Very strong cash flow. I think very few EV OEMs can boast a cash flow that's similar to GM. And they have the portfolio not just on the consumer side, on the commercial side too. And so they can push on both sides to kind of drive share and growth looking out. So,
opportunity? No? Oh, sorry. How did that get there? That's not foreshadowing. That's not the iceberg headed for the internal combustion engine. That was just a mistake. Next clip, please.
Sometimes the analogy fits so well, we just got to use it. If only to teach people what's really happening in the market. Sure, we can use the averages. They tell the tale of some of the day's action. Dow dipping 41 points, S&P declining 0.54%, NASDAQ losing 0.84%. But today I saw something worrisome, something that bothered me. I saw a hammered market. A market where the buyers have gotten drunk as a proverbial skunk, buying the worst of the worst. And when you get hammered, you know there's going to be a nasty hangover on the way.
He's not talking about GM stock buyback, right? Right?
Now, look, for most of the year, this market's been sane, sensible, a sober evaluator of merchandise. And that's why the Magnificent Seven racked up such big gains. Go back in time and remember when they were first running. It was literally one of the worst weeks of the year when the bank dominoes were falling. The rotation in the mega cap techs made tons of sense. At that very moment, we thought there'd be a credit crisis. Any company with a need to borrow money, a customer base that needs financing, looked like it was toast. So people dumped the banks and any companies that needed to borrow and gravitated to what? They gravitated to Alphabet, Amazon, Apple, Meta platforms, Microsoft, NVIDIA, and Tesla. See, these companies spew cash. They're practically ATM machines. Even Tesla, which used to be desperate for cash, but now has a pretty good balance sheet. The Magnificent Seven didn't just appear on the horizon one day out of nowhere. They were selected by a market that was sober, a sober judge of what could survive pretty much any downturn, as it seemed like a recession was suddenly in the cards.
I wonder if that's the difference between GM and Tesla.
Then as we got further away from the mini banking crisis, the market broadened out, and investors collectively got a nice buzz going. You could say the market grabbed a couple of Coronas and took its time drinking them. You can drag these sips out and maintain the buzz without getting plastered. That's a little advice there. Mind you, you can't drive. You can't discern the road like that. But you can buy more aggressive stuff and get a designated driver to take you home. And that's when we decided we could buy the artificial intelligence ancillary stocks like ServiceNow and Adobe, the highest quality techs that didn't make the Magnificent Seven cut. We lapped up cybersecurity like CrowdStrike and Palo Alto. We reached for Eli Lilly because of the chatter about GLP-1 success in reducing weight and treating diabetes. We grabbed AMD and it's an alternative to NVIDIA, glommed onto Cadence and Synopsys, partners NVIDIA. We gravitated to Walmart and Costco, the best of the retailers, and we fell in love with General Electric as a way to invest in aerospace. But not everyone at the party acts responsibly, do they? And some are just not content to be buzzed. There's always some jokers who want to cross the line, and what they want to get hammered. And that's where we are today. The hammered investors have taken over, and they're drinking some sort of Sterno-like punch out of a garbage can.
I love Jim Cramer. Now, Jim didn't mention it specifically, but just because Tesla does well, many other investors like to grab onto the next big thing, the next Tesla. Much like the analyst from Mizuho over there, he feels that GM's efforts will be flawless as they transition to battery electric vehicles. Not like they're gonna have any hang-ups or hiccups. Instead, he decides to get drunk on GM. Hell, even GM is getting drunk on GM. One hell of a buyback that they issued, which probably could have had a proper use somewhere else. I think it's safe to say that GM is not going to be the next Tesla. But that's no knock on GM. It applies to pretty much everyone else. Lucid's not gonna be the next Tesla. Rivian, not the next Tesla. Ford, not the next Tesla. But again, it's not their fault. The way their companies are organized and run, they just don't have the bandwidth to do the things that Tesla can do. Not to mention, Tesla has the best of the best when it comes to engineers, so their innovation and expertise is top-notch, grade A. To assume that any company adjacent to any of those in the Magnificent Seven can do exactly what the Magnificent Seven can do, well, you must be smoking the glass, my guy. That won't be an easy feat. Jim's main takeaway, though, exercise a little caution. In conclusion, we got a little bit more insight from Seth Goldstein over there at Morningstar. Seth is really bullish. He looks far into the future when it comes to Tesla and sees great things. He and the crew at Morningstar just need a little more proof in that pudding, I'd imagine, to raise their fair value estimates. And if I'm not mistaken, his catalyst might be the Model 2 vehicle. On the other end of the spectrum, we've got individuals that are riding high on GM stock. It's a little too risky for me, because I know where the internal combustion engine is headed. And trust me when I tell you, it's not going to be a pretty sight, folks. And Jim Cramer exercises a little caution. Not all stocks are going to perform like the Magnificent Seven. Guard your sobriety. Be mindful when you take that next shot at a particular stock. That's all I have for you today. Be easy. Peace.